Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Monday. It's November 27th. I hope everyone had a wonderful, filling and fulfilling Thanksgiving holiday. It's about 7:43. The market's going to gear up to open up in about an hour and 47 minutes, if my math still serves me right. Got a lot to talk about today, and remember something. A lot of folks are traveling. Yesterday was the biggest traveling day in history, from what I understand, according to a few airlines. So it's going to take a little bit of time for this week to become normal, and I would not expect this week to be fragmented. In other words, starting out a little slow and then gearing up as the week continues, because a lot of folks are just traveling, and a lot of hedge funds are looking for an excuse to get out of town last week and come in a little late. They're going to be coming in tonight, tomorrow. So I wouldn't expect too much volatility and trading action till Wednesday. But again, if there's something happening in the market, if there's unforeseen news, there may be something quicker than that. But again, I wouldn't be surprised if the first half of the week was very fragmented without a lot of follow through, simply because A, people are traveling, B, we're in the holiday season. So let's get into this, but let's keep the backdrop in mind. It's very important. So as you can see here, the Nasdaq's down about 12 ticks. This is very random. The Dow's down 49 points. This is really random. This isn't anything meaningful in this point in time. Now, we've got a lot of stuff going on this week, believe it or not. So first of all, let me show you the biggest earnings players to watch. And I'm gonna post this on my Telegram channel. And I'm going to make sure that you guys get this via email. But this is the expected volatility for the biggest players. So CrowdStrike, PDD, Snowflake, CRM, DELL, MRVL. Those are the biggest players. But if you look closely, you will see we have a lot of second-tier earnings. When I say second-tier, I don't mean bad quality companies. I mean not FANG stocks. But look, Zscaler. A lot of guys trade Zscaler. Tomorrow, CrowdStrike, Intuit, Pinduoduo, Splunk, Workday. These are really strong day trading stocks. A lot of folks swing trade and day trade these stocks. Wednesday we have Dollar Tree. We're still holding Dollar General. Just be mindful of that. Billy, Arrowhead, Five Below, Hormel. So you still got a lot of earnings coming out. And Snowflake, Victoria's Secrets. Oh yeah, it's like that. On Thursday you've got Academy. You've got Ulta Beauty, you've got DELL, you've got Frontline, you've got Kroger. Kroger's a big one. So you still have quite a lot of stocks coming out. Obviously, it's not Amazon, it's not Netflix, it's not Apple, but these are very tradable stocks, and they do have an influence in the market. So be very cautious this week in light of that, and in light of the fact that volatility may be higher because liquidity is a little lower as we start the session. Another thing you need to be mindful of, the bond market. Remember, the bond market huffed and puffed and made it look like it broke out right here. And I said, hey, this looks like rates are going lower because bonds are going higher. They have an inverse relationship. Well, look what the bond market is doing. It was down over a basis point on Friday, and now it's below this area. And what did I say? I was very clear. If we break out to the upside of this triangle, markets are going to go higher because that means rates are going to be lower, at least interpreted by the long bond. But if the market breaks out to the downside, it could put pressure on the stock market. And look at the stock market. Looks like it's curling a little bit. Now, after something like this, I wouldn't be surprised to see a little curl getting to the 8-day moving average, a little pause in the trend, maybe a couple of down days, and then some more upside. We're still in a bullish cycle, but it would be very strange not to have a couple of down days, especially with the bond market heading to the downside, not to the upside. Again, now we could break up from here. If we break up from here and break up and we start hitting towards the 100-day moving average, forget about everything I'm saying right now. We're moving up and it releases the pressure. But after something like this in the stock market, it would be kind of shocking if we just went straight up continuously. This is more likely, this type of a scenario where we build a base and then go higher. Or we start moving lower if the earnings and Fed data is really bad. But I'm not seeing it right now. I'm actually seeing investors getting happy about interest rates, potentially moving lower in first part of next year, which I don't think is going to happen. But here we are. Looking at the QQQ, we are, as you can see here, doing exactly the same thing. And look at the resistance level we're at. We're at a very strong resistance level. So it would make a lot of sense for us to kind of consolidate, kind of see what's going on, see if all the bullish signs are still there, see if the bears are starting to gain an edge on the market. It would make sense. And if you look at the Dow Jones, which actually has been doing pretty good in the last few days, it's really strong. Why? Investors are buying stocks, blue chip stocks, because blue chip stocks are a safe bet. And institutional investors always like to buy up blue chip stocks, Coca-Cola, Disney, Pepsi, Kroger, blue chips, quality stocks before the end of the year. Safety, and if they have more money under management, they get higher bonuses. It's about bonuses too. So don't be surprised. Also, don't be surprised if you start seeing stocks that have been on the downside lately starting to come up. For example, let me show you what I'm talking about. Etsy. Stock's been in the gutter for a long time, starting to come up. How about Dollar General, the stock that we're in right now? Starting to come up. So why is that? Well, I'll tell you why that is. And this is something you should pay attention to. A lot of investors and a lot of funds, when stock market does this, they feel it's a little overextended. So instead of buying stocks that are making you highs, they start buying lagging stocks. So towards the end of the year, after a big run up in the stock market, a lot of times you start seeing lagging stocks starting to catch up. We're seeing that right now. So don't be surprised if we saw stocks that have been lagging behind the big blue chip stocks to start leading, and also for the blue chip stocks that have been leading to start lagging a little bit. Remember, this is just simple sector rotation. This has been happening for decades, and I mean decades. Leaders lead, then leaders start coming down, then the laggards start pulling up. Then the laggards get a little tired. Some continue, but some get tired, and then the leaders come up, and that's how you have sector rotation. So, and right now, a lot of folks are getting nervous because the stock market's all the way up here. It's near all-time highs in this economy. So that's one of the reasons we're seeing laggards starting to lead, and stocks that were in the lower right quadrant starting to move higher to the upper right quadrant. Dollar General, Etsy, just a few to name a name for you. Now, let's talk about global economy. You've got GDP this week, folks. Also, we've got new home sales this week. Remember, I told you new construction is really gaining an edge. So you've got a lot of important Fed data, which I will talk about in a minute. You've got personal income on Thursday, not Friday. You've got ISM manufacturing, construction spending. That'll go really well with new construction sales this beginning of the week. You've got consumer confidence tomorrow. You've got the beige book. You've got the core inflationary data for the Fed this week. Let's talk a little bit about all of that. But it's going to be an interesting week. So market participants are looking ahead for Mr. Jerome Powell, who's going to tell us once again, we're moving in the right direction, but we need to just pause and wait and see what happens. Yes, he's actually being honest with you for once. He's not lying to you. That's exactly where they're at. They have no idea the impact of what they've done and how much it'll help. They need a couple of months to see the impact of it. Blue chips. Remember I told you blue chips are starting to outperform tech stocks. Very common end of year. They're making a 3.5 month high, not a 3.5 year high. I think Nasdaq is making a 3.5 year high, something like that. Economic data on Friday showed that global manufacturing fell to a 3-month low. At the same time, U.S. November S&P Global Services PMI crept to a 4-month high. So they're kind of balancing off each other. Nothing crazy there. There's now only a 22% chance that the Fed is going to cut rates in March. I think this is silly. I think anybody who's thinking that, watch me eat my words, right? But I think that anybody who really believes this is being extremely optimistic. I think the odds are very strong that they're not going to do anything or maybe even hike rates in March. So I think this is nonsense, and I think the bond market is going to react negatively to that. I don't think it's just going to break up from here unless Fed data is really good and really hot this week. You've got GDP, jobless claims, manufacturing. You've got a lot of data to remind us that we're not out of this period yet. U.S. core personal consumption expenditure index is coming out. That's what the Fed looks at. That's coming out this week as well. That's going to be the main highlight for the week. U.S. core personal consumption expenditure, and that's going to be coming out on Thursday. So keep an eye on that data. Sales revenue from online shopping and Black Friday was 7.5% higher. May give us a little bit of tailwind in retail sales, which have been actually doing pretty good. New home sales are out today. New construction or building permits have been doing really well, but existing home sales were lagging last week. Let's see how new home sales are doing. And also on top of that, you also have another housing report this week. I don't remember. I saw it earlier, but there's one more. Construction spending right here. So you've got new home sales, construction spending. I want to see how they go together. Now, this is the big construction spending, but I want to see how it'll impact because new home sales are a huge part of construction. So let's not throw the baby out with the bathwater. Europe, they're down just a hair. They're digesting disappointing Chinese economic data ahead of Christine Lagarde's monetary policy, not going to get any tailwind from China or Europe. China closed lower after latest heightened concerns about deflation in the world's second largest economy. They're struggling with the real estate sector really, really bad. Japan closed lower. Look, we're not getting tailwind from Europe, from China, or from Japan today. Investors exercise caution in anticipation of another U.S. inflation reading. I would exercise caution too, especially with the bond market right here. Not a good place to be. And prompting them to sell stocks to lock in profits. Today, keep an eye on CCI. Shopify got an upgrade. Roku, I've been talking about Roku. You're welcome. It's been getting an upgrade. Shopify got an upgrade. Foot Locker, Slit. Keep an eye on Nike. They're very, very closely related. But anyhow, let's look at sectors. Sectors you need to pay attention to. Home builders, retail, home builders and retail. I'm telling you got to pay attention to that. Now, let's look at over the last 3 weeks. Home builders. This is why I say new home sales data is going to be very important because home builders have been rallying. They're really strong. Semiconductors are strong. Technology strong. Communication, consumer discretionary. This is very speculative. Now, let's look at the last week. Retail, energy, healthcare, Russell 2000, midcaps, financial. Wait a minute. What happened here? You know what happened here. Look at QQQ all the way down here. Look at technology. All the way down here. Look at semiconductor. They didn't do well last week. Blue chips did. Small caps did. Healthcare did. Energy did. Financial did. Consumer discretionary, but that has some blue chips too. Industrial, material, home builders all the way down here. So as you could see, the week before last week, here's the story. Let me unfold it for you. Before last week, tech was really, really strong. Starting last week, tech started getting a little choppy. The bond market started slowing down. Now the bond market's at the bottom, not the upper end of the range. If that continues, it's going to put pressure on technology stock, and it's going to give bluer chip stocks a little more firepower. Keep an eye on that. If the bond market suddenly starts going up and breaks up again, well, guess what? Next time we look at this, you'll see tech. It'll look more like this than like this. But this is a really good gauge to keep you guys on the right track of what's happening. But you could see clearly that home builders are down here. Consumer discretionary is down here. Technology's down here. Semiconductors are down here. QQQ's down here. This was leading. Look, QQQ, semiconductor, this was all leading. So things are definitely taking a shift right now. Now, folks, before I let you go, so it's going to be a very tumultuous week. It may start out slow. Blue chips are still leading. Tech is lagging behind. We may have a sector rotation and a few bumps in the road. Before I let you guys go, folks, this is important. Please pay attention. Ever wonder how you can target 15 to 25% in extra cash every single month? Well, you're in luck because today at 1 p.m. Eastern Time, Casey Stubbs, that's right, Casey Stubbs is going to show everyone how to do it. That includes me, and I'll be there with him. You can target this extra cash without hardly lifting a finger. Hardly. You got to lift a little bit of a finger. Thanks to an automated trading robot that he designed. While you don't have flying cars yet, I'd love to have flying cars. We do have Casey's robot trading assistant to do the heavy lifting for us by exploiting a little-known pattern in a super specific market. It's not in the crypto market, not in the bond market. And it's not in the regular stock market either. What could it be? You'll find out at 1 p.m. today. Click the link below for all the details, and Casey Stubbs will see you at 1 p.m. sharp Eastern time, and I'll be hosting him. Don't miss out. Now, before you tune out, make sure to subscribe to our YouTube channel. Go to Roger Scott. Go to YouTube and go to Roger-Scott in the search box. You'll find it. In there, there's a link to subscribe to our Telegram channel. Don't miss out on the Telegram channel. Get free trades, get advice, get some goodies. I post there all the time. Most importantly, come into my VIP room. The link is there at noon today. Don't miss out. I'll see you guys later. If you need to reach me, a lot of you do, Roger at rogerscott.com. Bye.